So one of the questions I get is how long will a stock stay in +6 or negative segment 2? Here's the Moderna chart, and it's a pretty ugly chart. It's been in segment 2 quite a lot this year, but you can see that it's drifting here in segment 2. As the red weakens, it's moving up into the positive conditions. What that's doing is it's showing how the variables of those two canonical functions are shaping the drift from between the two centroids in the display of the momentum. And how long it's going to last appears to be random. We do see patterns where the clusters for different stocks, they last almost in even periods of time. And the other major factor for what can change the signal and move it out of that segment is earnings. So, if you get an earnings surprise, this is where we get the most abrupt changes, big drops or big jumps. As good as my model is, it can't predict what the company's going to announce. So I try and stay away from those quarterly earnings momentum surprises. I like to leverage it more when it's cleaner data. There's a lot less news interference because this is going to give me an accurate signal of the conditions. So that's one of the ways that I apply it. Is we can look at another example here. And these are stocks too that I recommend. These are coming right out of our portfolios for members. But here's another perfect example. Ondas Holdings. It's down here giving us, after more than a month of no positive signal, it started getting very positive. And we can just see the momentum just kept saying it should be higher, it should be higher, it should be higher. But it's taking in the non-price change variables and saying it can sustain more gains, or it's time to sell.